Welcome to the daily FX wrap-up here with ForexAnalytix. And obviously the story of the day is going to be this cable that is just continuing. Actually, it's just not the cable. It's all the sterling pairs have just continued to drop like a rock. We've even had a confluence of two fibs, 23, 32, 35. And this thing is just still dropping and dropping. So there's just no let up on this particular pair. One of the currency pairs that we did focus on, I was on Face webinar with Dale and Blake, was the dollar yen. And at the time, the dollar yen, I think, was trading around the 108.60. And I'd mentioned that last Friday, we had taken a scalp short against my level here at 881. That was our bias chart level that we were looking at, or that we had on tap, was 881. I guess the market got up a little bit higher, got up to what? Oh, 883, but we had 881 pinned, and I went short, and a few other guys in the chat room went short at that same level. I took half off, 10 lower, and then another half off to get out, and I just didn't want to be in it. But we did want to see a continued pullback. I mean, we paired back up, got up in the 70s, so we came off of that low, which was clicked it right on there at 60. So lucky exit on that. But we rallied back up, and then we did roll over. So actually we're referencing it this morning that we got as low as 40. So 40 pips off of that level. Some folks had stayed with it, but I had mentioned in the chat room that and in the European crossover webinar, but my concern was, I think if you got short at that 881 level, I'd be getting out, because I thought that the dollar yen had the opportunity to rally higher. Our bias chart resistance, you can see today, is 891, and the high for the yen today is, you're looking right there, is 890. So off by 1 pip. Like I said, if you haven't tried ForexAnalytix, try us out. It's 10 days for a it's $1. Try it out for 10 days. In the European crossover, we have this webinar at 4 a.m. Eastern. We cover the scalp short-term trading levels. Even if you're not a scalper or short-term trader, some of the guys and gals in the room will use this to incorporate with their own levels if they're looking to get long or short for more longer-term moves, to see if it's a confluence with what they're looking at. But like I said, you can see here we did pretty well on Friday with that scalp level against that. Today, 891. Today, I was looking for the dollar yen to go on and move higher. That's why we put it up to 891. We had it at 861. I mean 881, and we moved it up even higher. But I think the potential in the dollar yen is one moment. If you look on the daily, and I covered this in the Face webinar, it's for the potential to run back to the pivot. This market's been kind of holding okay over the last couple of weeks, kind of, as I said, kind of dilly-dallying around. And we took it, we had 832, and we would come up there and we just roll over. Come 832, roll over. But I think they have the opportunity to move higher, and really it's on the back of the dollar index, which is continue to find a bid. And I believe that we have the possibility of this thing rallying onto FOMC day up to the pivot of 927. If you look on his, this is a huge level. I've had in place for a while. I mentioned on Face, I remember when we danced up in here in these upper levels and come down here. It was a flash crash low back in January, and when it was making up this run up here to 112, I really thought we'd come down to the pivot. I myself was short from up here, got stopped out at 12. I think it's 1222. I think it was, and then eventually, I mean, I did get back in it, but not with the same gumption that I had. It was really frustrating, and I've profited a little bit here, but not really as much as, I mean, like I said, I was hell-bent to short this thing. As I mentioned on Face, there were some people that were talking about 114, 115. I simply didn't see it. I was just bearish as all get out. I really felt that we would get to 927. Well, at this point, I think we can make a return to it back to the pivot of 927, probably stopping out a few people. And if we see a disappointment, or we see the S&Ps come off, they've had a pretty fabulous run, maybe they can't go any higher, then I think this would be the better play of all the currencies. We're already seeing the move already developing today as we start to move higher. But I think if we do fail there, and we do see a pullback in S&Ps, and Blake on the Face webinar already pointed out about the divergence in the Nikkei, we could really see this thing come back down and make a good move to the 630 level, which would be the 78%. One of the things I looked at, with the yen is when it gets going, we can get some pretty good little moves here. We saw it even here and here. Look at these, and right here, another pretty good little swoop. Even after a low and not much of a bounce, same thing, another pretty good little swoop again. Same thing here, not even much, not like as if we came off, like in this area here, pretty good rally. You can see where the market would, where you could take into consideration where the market would correct and say, well, you know what, that was already a pretty big rally. That's that would be reasonable here. But you can see here, even here with the bounce here, right here, another dip, another dip. Look here, we barely even kind of pick ourselves up the floor off the pavement, and another pretty good dip. And same thing here. So once it gets going, it can get going. So to me, I think that's the one period to really look out. One of the things I was pointing out in Face. The euro, it's relatively quiet today. Euro's kind of moving a little bit higher as the dollar index pairs back. We had this 98.12 here last week, and we've seen the market kind of tie up here. We did put our bias chart resistance out today, and not that I expected to hit it today, but we had it at 98.29. And I think going into FOMC, that'll be really, it's 98.29. I previously had a 38. I think Olivier in the chat room, he's got 38 is also, but above that, if you were to take out these highs at 837, the real key levels, the key level above that would be 871. So we could maybe see the market rally. And then, like as Blake said, depending on if the market is disappointed, maybe we may see that. And I'll be following closely with the dollar yen on that. If it turns out bullish, I think the first pit stop is going to be 99.18, but there will be a pause at 871. We'll have to see. I don't think you should rush into the FOMC. I think it's a big event in the sense that I think let it play itself out. Don't rush in. I'm going to try and, I think I'm going to, put my keyboard and hide it in the next room or something like that, so I can't trade it for the first half hour. And I want to let this thing really play out to see. Another thing is, like I said, the dollar index is still staying on the bid very, very strong. I think that the only thing, disappointment is either going to be a 50 basis point cut, which I don't think is going to be the case, or if we get very dovish language in the sense that instead of just saying lip service, we're going to watch things as they develop, maybe they point out some additional things, and also maybe they put it with a little bit more, trying to think of the right, but with a little bit more teeth in it, that they're really going to be looking at things or they're gonna monitor inflation levels very closely or something like that, something that would say, wow, you know what, maybe they're putting us a little bit on notice, maybe there is a little bit more coming across, and then that would disappoint the dollar bulls. But this thing is certainly able to go in and move much higher. Man, this cable is something else. Blake had asked me if I had done anything, and I had not done anything. I think about 3 weeks ago, I think I might have picked it up and caught, like, it was a scalp, about 10 pips or 12 pips. It was something like that. I think it was like about 2 weeks ago, probably on this run where we got up to the 25.59. But once again, it was just a scalp. I haven't done anything in it. And I tell you what, it's a doggone good thing I haven't, because I would have been stepping in trying to figure out where to buy it. You see what I'm saying? And I certainly am glad I just haven't tangled with that cat. I think, like I said, I think it was maybe about 2 weeks ago, I might have grabbed a scalp, about 10 or 12 pips. And because at the time, I think it was just so oversold, and I didn't even stick in it for very long. Probably was in this area right in here. But I just didn't trust the cable, and I'm glad that I didn't try and catch this falling knife, because boy, it is really cutting some people up good, but good. Aussie's still hanging around near these lows. There really is a whole lot. The only thing with the dollar cat, I will say that some people ask me, do you have anything on the cat pairs? And really, we were talking about cross rates, and I don't really follow. I remember having a discussion with Steve about the CAD yen one time. Him and I were on Face. But now, as far as the dollar CAD, one of the things that we were looking at last week was I was looking for a move. Initially, at the first part of the week, we had 31.62. There's a level. Once again, we like to use our little scalp levels. That's our game here in the European crossover webinar. And let's go and move into that. And we got to that 31.62, and pull this back. We saw a nice little sell-off from there. Okay, nothing great, just a scalped it a little bit, and people. I talked about, hey, watch. You're going to see some bids come in at 31.42, and then we thought, I mean, for scalp levels, and then further down, we're saying, hey, 31.20. The market actually was on this day. We came within 2 pips of that and bounced around. We got below 20, bounced around, hung on, and I think we thought it might work a little bit lower. So we had our bias chart support. I remember at 31 even. But once we got past that, I said, hey, look, this market is looking for 31.90. It's looking for 31.90. I think we're going to get to 31.90. Saw some people shorting it and say, look, I think we'll get to 31.90 because we'd done all this work down here. And we simply were not able to go to a level that I thought we were going to get to, which was 29.95. So I thought the market was open to do a little bit of short covering. I didn't think it was going to go gangbusters. So my target was 31.90. I remember Steve mentioning on Face he had 32. And we made it up to 31.99, and I said before, significant pause. Well, we came off 50 pips from that, which isn't bad, but the market's kind of tried to bounce around this morning again, and I actually put the bias chart support resistance at 32, but we quickly ran out of gas around this 31.80, and we've kind of dipped back again. It's struggling, even though the dollar index is doing better. But that's about it. It's a very, very light, very, very quiet session for the most part to start with. We do have the dollar peso up here. We did have our bias chart resistance at 1909. This one has been languishing. It's right here at just above that 1909. And we did pop up real quick up to about 12. There's a potential this can go higher, but it's been really frustrating for longs and frustrating for bears to a certain extent. But that's all we have. We'll catch you tomorrow, and look at this cable. Boy, down, down, just like the submarine horn. And good luck trading for the rest of the day on a very quiet day as we head into the FOMC.